Hello dear traders, petar.jacimovic here from vicanalysis.com. I want to post the update on the USD, my position today. So this is our intraday position, and this is the, by the way, market profile chart separated by the sessions, here we can observe that this pink one, this is the Europe session, this is a US session, this is a, let's say, the pit session when the stock market opens in the US, and then we have the Sydney Asia session here, which is the yellow one here. Okay, so we have the separation by sessions. The point of control at this point from all sessions is here. You see the this area here, point of control. This area is here, point of control. This is the value area. At this point here is the value area, right, from the market profile. And if you're not familiar with the market profile, this is a part of my mentorship program. When we speak about the technical analysis, generally we will talk a lot of about the market profile analysis or the intraday trading. So if we speak about intraday trading, the market profile is probably the best tool, of course, together with price action, but you don't even need to use the price action. Of course, I have chart when I can see the price action. For example, well, watch this USD chart, right? So there is a broken upward trend channel and so on. This is the market profile, the same profile as this one I showed you, but the difference is because this is just the histogram profile without letters, which I spoke in my previous video if you remember, and here I have the price action and how the price actually traded here, right? So of course here you can see the price action that you have clearly. We broke the strong upward trend channel, upward trend line, and the seller scheming, and clearly we can see that if we separate the sessions, we can see that here we got A. You see the A, so every letter is worth like 30 minutes, and if the price, you see price started here, A went lower, higher A, then the B started to draw, and then we got B here, upward B, B here, C, D, and and so on. And we have the J here. You see that the price stopped here and actually closed here. This is the presentation of the bar basically for itself, right, for this session. So price closed here, and then the A session started. A session started here. We got price went here. We have a lot of single prints at the end of the Europe session. I mean, at the start of the US session. So 30 minutes before the US session started, we got the single prints on the Europe session, right? And this is very good because the weakness continued on the US session, and we see a lot of single prints. A here, A all the way to this point. We went a little bit like three single prints here, higher, and then went lower, and then the B star here again lower, right? So look at the B, it's going still lower and so on. My stop loss is just above the single prints of the Europes of this J here, right at the end of the start of the US session. Okay, so the stop loss is about 15 pips for this intraday setup, and I will try to take like at least 30-45 pips till end of the US session, right? I will try to take. So my target is basically, my fixed target is around 1.150 area, which is about 60 pips, and that will be about 1:4 ratio if I achieve this. So I will just see what will happen here, and also interesting thing in the background, we have interesting thing here in the pit session. Here we have the pit session, which is basically the US market session, when the US market start. So you see that single prints A here, a lot of single prints, like 4 or 5 single prints A here, pardon, E here, and that is something like we call the selling tail in the market profile. So something like the weakness from the very top. So this is like the pit session from yesterday, right? Then we got to nothing special this evening, of course, because it's we have just you know, a few hours there. Then we start the Asia session here, very neutral profile, and then the Europe session started, and we got the selling tail again. So if you observe the background from the previous here and selling tail here on the B period on the Europe session, so we have a weakness here. If we check the here the chart, we see the clear broken upward trend line, which is the price action has also confirmed that, and it is a very good setup in my opinion, right? It's already in the plus 15 pips, right? So basically you can put stop loss and break even. That's not bad idea at all, right? So it's not bad idea to put the stop loss and break even if the price go there. So better we also, this is the intraday trading, you know, B letter started also very aggressive, so sellers, very aggressive sellers on the US session. We can see that in this first hour of the US session. So this is a very, very good, and it confirmed the weakness from Europe session. Here, this Europe session, you know, selling tail, and also the very, very high here from the pit session there in the background, where is the E period. So now I will watch progress of this and see what's going on. But I have target near the 1.150. So we'll see how this will go. Pit session will start in about like 40 minutes, right? So that will be also, you know, very interesting to watch. So pit session is also very, very strong when the US session start. Okay, and that's pretty much what I wanted to alert you here, that we got weakness on the USD, the technical, the price action confirmed on the price action chart, right? So you watch this, you see where the market rejected here is the point of control from yesterday in the US session, but you can see also that here, right? You see this point of control from pit session, point of control from US session. Look at the B period there on the Europe session today, the rejection, the selling tail here, and then very, very 30 minutes before the US session started, a lot of single prints there, and very finished lower. Then US confirmed that with another strong selling came in, supply came in, so it is very, very good. In my opinion, basically, the point here is how I teach my students to trade, and what is the best thing to do is, of course, follow the fundamental, the market sentiment, to understand the reasons behind the price, the movement. So if there is no big news, for example, like today, then you must see what biggest events we got in the past, and we saw, for example, that we got weakness there. If you go here, right, and here, back in almost here, you know, this was a weakness. It was a massive volume spike, right? So this was a weakness of bar, you know, ultra widespread of the bar and so on. So we got weakness there created, but now the question is when is a good time to sell, since we know there is a weakness in the background, right? Because this was a interest rate decision in US, this area here, and we saw there is a weakness, you know, and bar closing in the middle and stuff like that. So now we need a perfect time to enter, right? And this may be a good area to start to establish your selling positions, at least for today, right? We don't know that if that can turn with which something very strong, or it just you know, intraday opportunity. But since I'm a more intraday trader here, I will like to see I like to close the setups at the end of the day, you know, and then see what happened when I wake up, you know, since I'm in Europe. And when I wake up, I see what happened in the Asia session. I see the sentiment on the Asia session, and then I start to read from the Europe session to see the initial balance, the first hour, what will happen, and then decide if I want and where I want to position if I see any opportunity. Of course, following if there is any big event or something like that, which I should wait for, right? So here again, when I some traders basically sold also on the Europe session here after the B period finished. Then this C period here, so some traders sold there at this point here as well, right? Because they saw the point of control from yesterday is near that price, and then the selling tail and so on. So this was also potential Europe session trade, and then the US traders immediately started to sell the US session. So we will see how this will finish. For me, there is a lot of room lower for this strong point of control in the background, but again, I follow step by step, you know. I secure myself, and I want to see what will happen at this point here. It will be very interesting. So far I'm in plus like 10-11 pips on this one. So that will be all for this video. Again, if you want to learn my method and how to use how to position yourself, how to read the market sentiment, read the background, read the fundamentals, and trade according to these things, then might I start my mentorship program, and to learn all of this, to learn and how to benefit and how to create success. Generally, I'm a big fan of intraday trading. If we speak about the forex trading, so trading on the forex, since the forex is a very for example, I trade also stock market very successfully, but in the stock market I basically trade a short term, right? So anything below short term is not so good on the stock market. So on the stock market I usually wait like few weeks, sometimes like 1 month or something, but going for 20, 30, 50, 60% or even higher, right? But on the forex is basically designed for session traders mostly, and forex is because of a big influence of the high frequency traders. You cannot anymore let like over the week or more, even the few days, if you hold your position, it can easily be countered, in the next sessions, next days. So even if you think that you are safe, that everything is going good, the very next day something showed up, some good, for example, good news or bad news, and that totally influenced your position, and pretty much you cannot catch these days right now, because a lot of high frequency traders and more high frequency traders and trading a very short term period, this is the era basically when on the forex market you basically in my opinion the best thing you can do is to position yourself day by day and work day by day, session by session, and observe what's going on. Okay, because you never know what can show up and where your opportunity, you know, where you see the good opportunity in the market. If you think that, for example, you're trading regularly like technical analysis or whatever, and you think that for example, regular, if you trade technical analysis, for example, you see the bearish flag here and then the breakout, right? So you're saying that this is because of strong supply there. This will go much lower, you know, because this is a very solid bearish flag. Price also broke, for example, the swing low here, and you think that this is going very good, and then the strong interest rate decision came in, and look at this. Hit all stop losses from sellers at this point who don't have basic knowledge and don't watch the news releases, the big high impact releases, and so on. So generally you cannot hold for some big returns in terms of the pips, right? So in this era and in the 21st century, and you know, holding a position even overnight is a very risky, right? It is very risky. You know, imagine you have a position. Let's say you're a big trader. You have a very big portfolio. Will you trade something in that position overnight? Let's say that you trade with millions and so on. Will you even think about letting position overnight on the forex market, knowing that every news, every speech, or you know, every big intermarket coloration, for example, if something happened with the bonds yields and something like that on the Asia session, something on, you know, and that can absolutely change the market sentiment, you know, and so on. So in my opinion, trading like even holding a position overnight is very risky. Okay, you can hold, even to try sometime to hold overnight, but only if you are secured, if you're on the break even or your stop loss is raised, you know, so if you are protected. But to be in position without that you can control and follow the sessions and see what's going on, that is a very unprofessional and very risky job. So I don't advise you, and this is something like basic in the professional trading, right? So the best thing you can do, in my opinion, is to trade session by session, try to see what's going on there, try to find the good the current sentiment, the market, to see the market background, and then try to position yourself and try to catch whatever 1-2, 1-3 ratio. So whatever ratio you can grab for that day, it is good. Okay, so for example, this is right now you will see the C letter will start to draw in a 1 minute, and it will start from where we stop. So probably we start from this point. This will probably finish the price will finish here, and the C letter will start to draw from this point here. Okay, so again, big difference. Forex is more for intraday traders, for you know, high frequency traders, right? Forex is not so good to hold a short-term position trade, because you know, sentiment can change in the next session, in the next day, so it's a very risky. And now you will see the C period started here. You see the C period here. This is a C period right now. So again, A, B, very strong initial balance here on this session. So I'm expecting again further downward continuation, and at least to try to catch like 30, 45, 30 to 60 pips till end of the day. So I have like 3-4 hours, I mean till end of the US session. So since I'm watching the pretty much here from London session till, let's say, close of the London session, and like let's say a few hours after, so this is what where I trade, you know. So okay, so that will be you see the C period is going like lower, see, so price is going lower, and we'll see how much we can go, right? This will be all. I hope you enjoyed in this video, and wish you good trading and have a nice day.